Hey guys, it's Will. In this video, we're going to be going over the top 5 space stocks that you could be watching here in this summer. If you're curious about emerging markets, I would encourage you guys, we just launched an emerging market class for free. It's the first link in the description if you want to get that full class absolutely free. So we have our 5 top stocks here. The first one is going to be Rocket Lab. Then you got ASTS, Black Sky, RDW, and AMD. I'm giving you them at the beginning, but you don't want to miss why they are here in the top 5. When it comes to Rocket Lab, the first thing you got to watch with Rocket Lab is their recent move. They are a company that I was introduced to a couple years ago in 2022, as I have a friend that works there who I used to live with, and they were around $2 or $3 a share. But in the last year, they've surged from about $3 a share up to, at one point in January, $33 a share. Sold off with the rest of the space market into February and March, and they are back up to recently $30 a share this past week before selling back down to 26. So this is the trend that's starting to develop with Rocket Lab, and that's how it looks right now. So you can see the overall direction is starting to look bullish, but that it's sold down, and now it's testing that 200-day moving average again. So what do we know? Oftentimes when it's holding above that green line, it's pretty bullish, and holding above the blue line, those EMAs, it is bullish as well. But recently it broke below, it pulled back, and it's possible that it uses this previous resistance here as a support. And the hyperbole case is that we see it continue this direction upward. But I think what might be more likely to happen is a little bit more of a sell-off, maybe even down in this $24 or $25 range. I don't know that I'm so conservative we'd see it down to $22 because they are doing a lot of things that are bringing value. In fact, I think I'm more between a slightly conservative outlook down to $25 or $24 in the near term. And I'd like to see that hyperbole case kick in where we get to see it back into those all-time highs, which the margin for profit in that case, if we do see that happen from current price, this V-shaped pattern would be about 15% to previous highs would be about 30%. So the margins seem to be there, but again, kind of has some downward momentum right now, and we have to watch it and see if it can reverse, because a stock has a greater chance of continuing in the direction it's going than reversing. Right now, it is selling off. It's below that EMA. It's below almost a 200-day moving average, and so it's possible this sell-off continues down. So we'd have to wait, see if we start to get confirmation of that reversal before taking any positions on RKLB. When it comes to RKLB, they are launching their next launch for our company, another company that's in our top 5 that we have here. But they launch for companies, satellites. They launch for the Mars mission, for NASA. They have very widespread connections from Department of Defense to recently acquiring Geost, which is a company, and they are specialized in national security, working with the U.S. Space Force as well. And they also have hundreds of millions of dollars in contracts, multi-billion-dollar contracts even, from not just the U.S., but also UK defense. So they work with defense, U.S. Space Force. They also have their new Electron rocket. You might say, okay, well, so they're a space company. What do? They specifically launch rockets and specialize in end-to-end development, which means there's 2 things I think are really unique. The first is that they manufacture everything themselves. From the end-to-end means they have complete spacecraft design, from manufacturing the satellites to the individual solar cells or even the semiconductors. They are building it. And what do we know? I mean, NASA, some of the biggest innovations in the world in the 1900s, for example, this pencil here was developed as a result of trying to figure out how to run technology in space. And so by them being an end-to-end company and working on all the individual things that go into building their rockets, from a end-to-end perspective, most likely they're going to find a lot of technologically advanced ways of doing things, I would imagine. The other second thing that they do well is that they have carbon composite, carbon fiber makeups of their rockets, which means they're more expensive than steel, the actual material, but they save so much money on their payloads and the rockets being much more lighter and easier potentially to construct. So they save a lot of money on the not the purchasing, it's more expensive than steel, but by having a lighter rocket and more efficient rockets material. So it is not as cheap to first construct the material, but they end up saving money, I believe, through the payloads and being able to not require as much energy to get the rockets into space if they were using as opposed to steel, right? So things look good. They got some launches for many different companies, and then their financials have looked fairly good. They are okay as far as net income, still negative and down a little bit, but their revenue is up 32% year over year, and they've been beating their earnings per share as well as their revenue. There in the quarterly announcement they just released here back in March. So things looking fairly good. Market cap's at 12 billion, so still a little high for their net income. And when you just look at the financial side of things, and that's why we could consider potentially, like in that chart, a little more of a sell down. I think that would make sense, and that we're not just going to see a parabolic move fully upwards, but that the conservative, maybe longer term approach, longer term looks very good. Shorter term could be a little bit overextended still, and possibly could see some sell-offs. So when it comes to the holders, they got BlackRock. I believe BlackRock. They got Morgan Stanley, Charles Schwab, Bank of America, Vanguard, BlackRock. So some of the biggest holders and institutions have this trend of more increased positions than decreased positions, meaning they're buying more than they're selling when it comes to the institutionals. So what we're going to watch here at market open is see if we get a dip. If it dips down here below the 200-day moving average, essentially we really would just want to wait patiently and see if we get some more correction and more of a confirmation of a reversal. Otherwise, it does seem to be correcting down, and we got to see how long it does correct right now, because it is at this previous resistance, which could act as a support, but more than likely could also sell down to this $22 to $23 range. But long term looks good, just expecting some volatility in the near term. When it comes down to number 2, it's going to be ASTS. ASTS, we have some drawings out for, and we'll kind of go into them, a lot of different support levels, but just take the drawings out. I was introduced to this company back in 2022, around $3 a share. My friend actually worked with them, and they consolidated, even declined from that $3 a share since then down to $2. But this is an interesting pattern. You see, they have partnerships with Verizon and AT&T, and you say, why? Well, it's because they're developing technology that allows us to power our cell phones more efficiently from satellite internet. So how can you do that? Well, Starlink mostly only works from the big little panel, the big little panel that you put, and it gets you internet. But the company that has a slight connection, it's not a very good connection, but they do have some satellite connection directly to phones, is T-Mobile. And when T-Mobile partnered with Starlink back in 2021, they ended up surging. It was here, December 2021. They partnered with Starlink and they surged 126%. And it was a big part of their growth. Now, when it comes to ASTS, ASTS is also in a similar position. You can see their stock here that we can take a look at some of their news. So just to give an outlook actually of what they have this technology that is space 5G cellular broadbands. So once they launch something into satellite up into space, Then it expands. I'm pretty sure there's an animation here. Yep. It expands and becomes this bigger thing that can now act as 5G cellular broadband. And AST has these constellations that they're launching. And as a result of this, getting partnerships with some seriously good partnerships. You got U.S. government, Japan, Europe, cellular broadband for all of them. You have successfully completes unfolding of first 5 commercial satellites in low Earth orbit. That was towards the end of 2024. They also have pretty good growth when it comes to their partnerships. Like we said, they got partnerships with, they have this direct to service satellite applications, and they're with some of the biggest companies like, AT&T and Verizon right here. You can see this partnership recently announced there. And they got some big contracts in the millions of dollars. So when you look at their financials, we could look on Google Finance, for example. Their net income has not been that good, and their revenue's been kind of just holding around $1 million a quarter, so nothing crazy. In fact, actually, their financials don't look good. They look okay. But they're building up some infrastructure quietly that could put them at a huge advantage in the future. And one thing to note, while things didn't seem to, on the surface, have a big change, in their recent earnings, their assets surged to $137 billion. Pretty big surge on their assets to finally cross over that $1 billion mark. And you do see a steady increase of their assets quarter over quarter here. The problem is that their liabilities also has increased up to about 600 million. So they're still maybe net green on the balance sheet, but the year over year change is up 315%, which is pretty good. So that side of the financials look fairly good, but their targets on revenue reported or their earnings per share has looked okay. So not anything crazy. What we saw recently is a surge from $1 up to $39 in August 2024. From August, they sold down with the rest of the market all the way to January, and then surged from that sell down of $17 up to recently $35 a share. Now I have some very clear support and resistance levels. Right here is a support level. There was a previous consolidation. You got support. It broke below it. It's more of a zone there, but it is pretty strong. Then you got this resistance. Let's actually break down the chart a little closer. You got this resistance, support there that it's kind of just recently got rejected at right here. And so the next level, maybe if it continues this sell down, could be possibly it finds a bounce before, but down to this $22 or $21 range could make sense. Now, if we see them recover and get back up into these levels, kind of that next level of resistance here is pretty strong at about $30 a share, which is 30% over its current price. That's actually, quite the margin for profit. And then if we get back to some of the highs we saw recently, about a 60% increase. And then of course, all-time highs would be about a 75% increase from current prices. But again, they're up there and the financials look okay. So I think it might be likely we see this sell-off continue a little bit more and have a more conservative, steady uptrend, as it has been extremely volatile as of recently. So I wouldn't say it's a buy right now. In fact, it is selling down and has a good chance of continuing that sell-off before reversing. So I would just kind of watch, maybe wait for that recovery before entering and getting a little more confirmation. So we'll be watching it closely. Number 3 is going to be Black Sky. Black Sky is right there with Rocket Lab. As we mentioned, their missions, like Rocket Lab's next mission, is actually launching Black Sky in their mission Full Stream Ahead. The mission will launch Black Sky's Gen 3 satellites, a mid-inclination cellular or circular 470 kilometer orbit. This is good. This means they're working with top companies like Rocket Lab. So Black Sky is a company that specializes primarily in the satellite space. And what we have mapped out for Black Sky is volatility, some extreme volatility. And we kind of take a look here. It has been volatile. And since IPO, they sold off. But there's been this slight declination where it's been pretty consistent and it's starting to trend, and it just popped above that 200-day moving average and then retested down in the 200-day moving average, and it's starting to maybe continue this trend. So Black Sky has some press releases out, and before we get in there, we get to products. They are very interesting. They're kind of like Big Bear AI is to transportation and on the ground defense of like scanning people's face. They are to the space industry. So they get insights in time to decide and operate world's most advanced space-based intelligence platforms, providing satellite imagery and analytics, and they specify pretty strongly. Well, I'm looking for that word. Pretty adamantly, that's the word, that they are specializing in using AI. So what does that mean? What does that look like? Well, you can kind of see like they give these like screenshots, daytime, nighttime, stereo, and all that. But if you really look at what they're doing, they are tracking all of the vehicles, all of the boats, for example, that are in the marina. They're tracking all of that. You see that? And they could see people, they could see aircrafts, they could see signatures of thermal, and it's pretty crazy, right? They even got some images of all these different places in the world that they're able to really see, and they could see all of the different areas from a bird's eye view. And while it might seem like, okay, it's just satellite imaging, I mean, that's extremely good imaging. I think that it probably even gets better than that, and that they could zoom in very, very closely. And so some of their news has included some good contracts recently. And if you look at their stock, they're still under about $355 million market cap. And their financials have revenues of about $30 million per quarter there, up 21% year over year, so increasing revenue. And their net profit margins are doing better, up 33%. They beat their earnings per share and their revenue there in their last quarter. So their financials are looking better. And when we look at their charts, again, we're kind of looking at this. We've seen levels up here in this $20 to $30 range. And so kind of what the thought process is for me is to see them get into that $500 million market cap or so would mean they're up at this 50% increase to even a 97% increase. So I do think this trend could possibly hold, as there is this pretty strong resistance at about $10 a share, but they're holding above the EMA, which is that blue line. The RSI and MACD look slightly overbought, so it's possible they do pull down more. But if they continue the trend, again, we're looking at a potential swing here of about 50% increase if they continue that trend. So Black Sky, definitely on the list there at number 3. Number 4 is going to be, and we're going to watch really closely too, because if it dips at market open and recovers, we might play that one. If you ever want to join us in the market live sessions, definitely stay tuned. We're about to announce something really special for you here at the end of the video. Redwire has had some interesting moves. I got to go meet some of their executives and actually get a chance to see some of their new announcements, but they're all over the place. They work with Department of Defense. They're working with Air Force Research Laboratory. They're in the US, but they also work with European Space. And this is a company that, according to some of their news that they've had come out, has really started to develop some advanced satellite technology. And they are working in the same industry, really, as kind of Black Sky, but they also focus on other things. Like, for example, gold, going for gold in microgravity, or I think one of the interesting ones was drug discovery, pharmaceutical drug discovery in space. So they're doing like research in space on satellites, um, which is a very interesting concept, right? It's like look at that NASA contract they were just awarded for pharmaceutical drug development in space. Very interesting. And then this was the space symposium that we went to. At that event, or shortly after, they at that event actually, I was there for the announcement. They announced a iSpace US contract that they were awarded. Now this is pretty big because this allows for a maximum contract value of up to $2.6 billion. So this could potentially really increase their revenue here in the near term. And their company is specializing in expanding into space for reliable, economical, and sustainable infrastructure for future generations. And they got integrated mission enablers with products relevant to almost every space mission, including power generation, antennas, deployable solutions, star trackers, and camera systems. So when you get into their stock and you see their revenues, they're still not there on the net income, a little bit negative, and they missed their revenue there about 16% in the last quarter. But it's okay, they're holding a market cap that's still relatively low, around $1 billion. It's okay financials. When we've dove in and we've really looked at for example, Google financials, you could see the income statement there. It's like slightly declining on their revenue. So we've seen a slight decline on revenue, and the net income has actually gotten a little better. You see that kind of improved back down to zero. So cutting some of their expenses potentially. You can see that their net profit margins are up about 47% year over year. And then when you get into their balance sheet, kind of consistent, right? They've increased their total assets and cut down some of their liabilities, and they look really better year over year. So they're up 66% year over year. So fairly good. So that's Redwire's outlook. And then you look at their recent trend, they're at this pretty strong previous resistance and support, and they just got rejected there. Kind of on their way down, possibly. It's holding below that EMA. So we got to see if it breaks above 1450. That would be more bullish momentum. Otherwise, it's getting rejected, and we could see it sell down here to this $12 or $13 range, as that's its current trend that we're developing. So if that happens and we see it, whether it's recently right here or right here at market open, we start to see it push up, or it sells down kind of in this range, the margin for profit would be about a 25% swing in its current trend. But if we see it maybe make up to previous highs at that $27 range, or even this resistance is about 40%, to previous highs is about 96%. But again, we would want to see their net income probably do even better for that to happen. But they are signing the types of contracts that one quarter here in the near term could see a massive influx of cash as a result of some of the recent contracts we saw them sign. So that's how it looks for Redwire. And we'll see that $12 range. If it really does hold above 13, we're still very bullish, as it's well above that 200-day moving average. So the last stock is maybe kind of a wild card. You say, Will, why is this in here? AMD stock. When you have companies that are the biggest in the world, there are other technologies that drive those companies. A good example is SpaceX. SpaceX has Starlink, and Starlink is the main product that a lot of these companies are aspiring to build. ASTS coming closer there with their cellular. But the tech that drives not just the Starlinks, but the actual satellites are AMD chips. So if you take a look at AMD stock, you can see Starlink is a satellite internet service owned by SpaceX, and it's powered by AMD's Versal AI core chips. So AMD is powering it. And I just want to say thank you guys. I appreciate it. You can see it says sign in up in the top right. So not anything that's, would know, but we're the first channel that comes up when it comes to the research on AMD and Starlink. And you can see some of our videos here popping up, and some of the articles that come out related to AMD's chips that are powering Starlink. So with AMD stock in that position, I think it's a really, really good position for them to be in, because Starlink is an innovator, and you can see, if it's not their Time CEO of the year, if it's not that they've doubled their revenue and literally been doubling their revenue but continuing to sell off their stock, if it's not that their CEO is the cousin of Nvidia's CEO Jensen, or that they're expanding into data centers and seeing the massive surges in their profits recently, it is their partnership with Starlink. And I think that's a really big one. And so they recently rallied a little bit from that $75 a share to about $125, and just pulled down to $110. And when it comes to the move on AMD, some people say it's the advanced money destroyer. It's what AMD stands for. I think it's the advanced money duplicator. It's just taking more time to develop. But when we look at the margins here, they're starting to recover, finding this overall trend. And if they get up into these highs where they've been still coming out with really great earnings, but continuing to sell off, and we get back into these levels, it's about a 100% increase potentially. Even in the near term, we got a 10% swing. And so when it comes to AMD stocks financials, they got billions in revenue per quarter. They're up 35% year over year. Their net income, $709 million, is up 476% year over year, beating their revenue, beating their earnings per share, but they've still continued to sell off. So their financials look very good, but they've continued to sell down. And I think that they are not just in data centers. If it's not the AI infrastructure they're building, it's also that they're a top provider for Tesla, for Starlink, even for Apple and some other companies. I think that it makes sense that we see them as a big recovery. So let's say they make some of these recoveries. We're talking about, between 10 and 100% profit. And if that happens, we'll most likely trade AMDL. AMDL is what we trade at market open a lot of times. And we have this plan here for AMDL that hasn't executed yet. It's this, here is the plan that we have set that we'd like to enter here in the coming week. And if we enter it, it's going to be right around here, AMDL. It's about a 16% margin for profit on the near term. And we'll be watching at market open to see if we can enter there for that trade. If you guys ever want to see our daily live trading, there's Stockmates. And normally I would say go there in the second link in the description, and you totally can. You get a free t-shirt, you get lifetime access, and it's pretty early at 6:30 a.m. Pacific Standard Time every day, Monday through Friday. But if you you get, it's early, but you do get all of my entries, all of my exits. You get to surround yourself with other like-minded traders and investors. And we go live there for daily trading Monday through Friday. When it comes to the returns we've seen, they've been really good. And I would say for you to check out StockMe. But the next level of that, if you really want to accelerate your growth and get all the resources, we just recently launched the virtual stock trading system. So 6 weeks of virtual Zoom calls, Zoom classes for 6 weeks. We've already done the first 2 weeks, which you get immediate access to. But on top of that, this is in the first link in the description. If you join the virtual stock trading system, we just recently launched our new beta software here for Mercatus. So Mercatus is a software that specializes in future prices. And as you can see, it is not past charts, but based on AI analysis for the future. And it's for visualizing your advantage, seeing the markets and how they're emerging. So we have emerging markets that can be visualized in 3D and how they're starting to emerge. You got dashboards that are customizable and interchangeable. You could change the different AI model that we use for the projection of the future price, so that you can use the best AIs that are out. So it's interchangeable. And I'm excited to launch it. We just got it out. So this is a beta that's actually included. So I can come over here. I can, for example, open up Quantum, see how stocks are connected. I could click on one of these companies. I could even go into AI over here. I could see how Big Bear is connected with Palantir, for example. I can jump in. I could add an analysis, and it will give me an analysis on the time frame that I'm looking at. So in this case, we're looking at the next day. But it doesn't stop there. I can actually add a future chart. And in our beta access, actually see what AI, in this case, it's the OpenAI's recent model, is considering with millions of real-time data points. What is the future price of this stock in the next 3 months? Not only that, but it gives you the actual research as well as the different articles that relate to that future time frame. So why is that important? Well, you get it for free when you're a part of our virtual stock trading system. So if you ever want to join those 6 weeks of classes, get StockMate as a bonus for free when you enroll, and get 1 year access to that beta software and get a one-on-one call with myself, might as well check the first link in the description. There's a class we released on Thursday that I would encourage you guys to check out. Thanks so much for watching. If I earned your thumbs up, hit the like button. Those are our top 5. If I earned your subscription to the channel, make sure to subscribe down below. And I'll see you guys in the next video. Take care.